Hello everyone, what a wild rollercoaster week we had in the stock market. The stock market staged one of the biggest reversal on Thursday, even when inflation hit the highest level in 40 years. Then it came falling down the next day, leaving investors puzzled over what had happened. In this video, I will be sharing my view on this wild rollercoaster ride and also what can we expect as the earnings seasons get going. Also, some of the mega cap stocks have fallen to a decent price, which I will be sharing more in the technical segment too. CPI data came in hot last Thursday, higher than analysts estimate, and the market plunged when the report was out. But what shocked the market was that it did a wild reversal during the trading hours. In fact, that was one of the biggest intraday reversal in the stock market history. But then on the very next day, which is a Friday, the market plummeted again. It's like sitting on a wild rollercoaster ride, and it is also like toying with investors and traders' feelings. My personal sensing of the massive rally on Thursday despite a hot inflation number is likely due to institutions taking profits by covering their short positions that they had established earlier. It could also be algorithm kicking in when it hit June's low or the 200 moving average on weekly chart of S&P 500. More on that later in the technical segment. At the moment, it clearly shows that we are not out of the woods yet. CPI data brought us on a wild ride last week, and we could have similar rides in the coming weeks for individual stocks as the mega companies report their earnings. The ones that I will be watching out this week would be Bank of America, Tesla and Netflix. I would also be interested to see how a stubborn inflation, aggressive rate hikes and strong US dollar going to affect the earnings and forecasts of these huge companies. I think investors should be prepared for a huge dump if the companies report both poor earnings and forecasts. That could be gap down on the daily chart. On the other hand, if earnings turn out to be okay or good and the market rallied, you know the drill, it's the short the rip season and don't chase the upside, aka a raging bull. But again, this is not a financial advice, okay? Moving on to the technical analysis segment, this week shall be a bit different as I am starting things off with VIX. For viewers who are not aware, VIX is the level of fear or stress in the stock market, and it usually moves in opposite direction of the stock market. Looking at the chart, you can see there is a yellow dotted downward trend line that I have drawn. Over the last 2 weeks, VIX has broken above the trend line on a few occasions, and that is one of the reasons why the market has been red. As we zoom into the chart, you will realize that VIX has been floating above the trend line last week. Specifically on Friday, it came back down to retest the line and ended the session sitting right above it. In the process, it formed a long-legged doji candlestick, which means there is an indecision in the market right now. This kind of means that the market is still trying to find its direction in the near term. So watch how VIX moves in the upcoming week, especially when we have the big guns reporting their earnings. What's worth highlighting is that the market has already tested June's low and is currently sitting around that area. So if VIX bounces off this trend line and break away and the market continues to fall from the current level, then another new low could possibly be formed for S&P 500. Okay, now let's look at S&P 500 itself, and I usually watch the ticker symbol SPY. Previously, I have shared that once June's low was broken, there is little support at the bottom, and we could head towards 340's range. So there you go, SPY hit 348 last Thursday. Okay, that's the past. Moving forward, let's check out the weekly chart, as I would like to bring your attention to the 200 moving average. Over the last 20 years, the weekly chart has tested this moving average only on 4 occasions: 2004, 2008, 2011, and recently 2020 during the COVID crash. And this year, 2022, we have made history. This is the 5th time we are testing it. When we zoom into the chart, you will realize that it briefly kissed this 200 moving average and bounced up. And this could be what I have mentioned earlier. The institution's computer algorithm kicks in by sweeping up some of the stocks. Then again, this is just my wild guess. Next week or in the next 2 weeks, especially when the mega cap companies report their earnings, watch if this 200 moving average gets breached. If it does, the market will be very bearish. And in terms of SPY, we are looking at low 340s as the first level of sell-off, with probability of it hitting 320s too, which is the pre-pandemic high. Not saying it will definitely happen, this is more of mentally preparing you for a potential capitulation. So that's for the downside. Moving over to the daily chart, on the upside, immediate heavy resistance would be 367, as that is the first Fibonacci retracement level if the market wants to bounce up. Coincidentally, that is also roughly where the downward trend line is currently sitting at. If 367 breaks, then we could maybe bounce up to 379. That's quite a fair bit of upside. Therefore, gutsy traders can try to ride the rally if there is any, but do set tight stop losses. Okay, moving on to Apple. But before that, if you have found this video useful so far, please remember to hit the like and subscribe buttons to help with the YouTube algorithm. This will also encourage me to keep producing such videos. Thank you. Alright, Apple is one of the few mega cap companies that have not broken June's low, which is sitting at around 128. Anyway, if you recall, I have shared that we could hit low 130s, and again the level was hit last week. So looking ahead, what's next? Well, no crystal ball here. As usual, I'm going to paint two scenarios with conditions. When conditions are met, then the probability of that scenario playing out would be higher. But of course, I could be wrong. Okay, on the upside, there is a gap at 144 to 145, followed by a Fibonacci retracement level of resistance at 146. So very simple, if Apple reports good earnings in the following week, we could bounce up to this area and sellers could start stepping in. But if Apple can break above this area, then we could fly above 150. At this very point, I think it's quite tough. On the downside, there is a small little gap between 132 to 133. Any stinker from the company or the tech industry, I think the chance of hitting this area is very high, with also some probability of finally testing June's low at 128, which should serve as a strong support. Personally, I am waiting around this area 128 to 133 to load up some shares, and will load up more if it doesn't bounce off June's low. Moving on to Tesla, a super volatile stock, I think 200 should present a strong psychological support. Looking at the RSI indicator, it's currently severely oversold. And when you zoom out the chart, you will realize that when RSI hit the rock bottom on previous occasions, it usually have a rally. But whether the rally lasts or not, it's another story. So perhaps, just perhaps, this may not be the right time to load up puts on Tesla yet, until the RSI gets cooled down. But a huge caveat and disclaimer here, Tesla is very volatile, and I believe market makers have huge control over it, so I could be completely wrong and oversold stock can remain oversold. To add on, Wednesday's earnings call will be a wild card too. Okay, so let's say there isn't a rally and 200 gets breached, we could hit towards 188 to 190 where there is a gap there. Further down, 180 should provide a strong support. If not, wow, the next meaningful support looks like it's the pre-pandemic high at around 168. Interestingly, on the weekly chart, there seemed to be a head and shoulder forming, and if it plays out, we could really hit 160's range. On the upside, there is a gap between 234 to 235, after which, can you see the two dotted lines? One is the downward trend line, the other is a resistance level, at around 245 to 253. I believe both will present a heavy resistance for Tesla. Tesla needs to get above them to be bullish in the short term. Next, Microsoft, it has finally touched the consolidation zone that I have been talking for many months, but it didn't stay within the zone for too long as it bounced up. At the moment, the previous support of 240 has turned into a resistance. There is also a big gap between 241 to 246. Personally, I'm expecting some sellers to step in around this range. On the downside, still the same, I'm still waiting for it to officially enter the consolidation zone and stay there, which is around 200 to 220's range. Finally, we have Google. I'm loving this stock because it has been trading around a relatively tight range around 95 to 100-ish. It's kind of obvious that the resistance is at 100 as the stock keeps getting rejected at this level, after which the next resistance level is at 105. This is also the price level which I use as a gauge to sell my covered call. Just to share with everyone, I sold a call contract with 105 strike price when Google was at 98 or 99. This is because given the current bear market, It is quite tough for Google to break above both resistance levels of 100 and 105. Even if it does, it's okay too, as I will profit from selling 100 Google shares at $105. For info, I also sold a put contract some time ago with a $90 strike price. Again, I used $90 support level as a gauge to sell this option. The contract will be expiring next week, just before Google reports its earnings, and thus avoiding any potential wow swing. With that being said, there is still a possibility that Google could go below $90 next week, so I will just have to be nimble to close the position if necessary to lock in profits. Some end thoughts here. I think currently the market is at a very interesting point as we tested June's low. I believe lots of traders and investors are starting to wonder again where is the market bottom, especially those who believe that June was the bottom when we had that summer rally. I am also pretty sure some investors are trying to pick the bottom again and throw in numbers like SPX will reach $3,004, $3,002 or even $3,000. But where exactly is the bottom? To be honest, this is a million or even a $1 trillion question that nobody can answer. My take is the bottom will be in if the following happens. First, you have investment gurus or experts throwing in numbers or levels that the market will go to. Then, you will have experts calling each other out that their bottom is not the bottom. After which, I believe all of this, if not 95% or more of these experts will get it wrong. Finally, when everyone is so sick and tired of calling the bottom, and when we least expected, the bottom could have been formed and the market start to rally. Anyway, don't take what I just said seriously, okay? The point is, if you still haven't gotten my point, don't bother trying to pick the bottom. As you can see, so many experts with so much data can't even pick it right. So what are we? We are just small retail investors trying to profit some small bucks in the stock market. Once again, going back to what I have always preached, set a few levels or price targets, dip your toes in at these price targets. Personally, I have swept up Tesla, Google, Apple and Microsoft over the last 1 month, mostly at my first level of price target. I am currently waiting at the second level of price target to pick up more shares. Massive rallies like the one we had on Thursday or even during June to August period are exciting and give investors hope of a market bottom. But a lot more evidence is needed to suggest that's the case. Overall, I don't see any clear signals that the worst is behind us, so if you are uncomfortable to buy some of the greatest companies at discount, feel free to just hold cash if it allows you to sleep better at night. There's no right or wrong. Alright, that's all for this video. Let me know in the comments section if you have bought this recent dip. Would love to hear them. And lastly, if you think my video value add to your research, please help to hit the like and subscribe buttons. Thank you very much.